Hey, this is Matt from InvestiQuant. Today is Thursday, July 8, 2021. This morning, the market saw a giant down gap. The S&P gapped down 57 points and consolidated in a range of about 20 points for the first 90 minutes or so of trading. We have since broken out to the upside, and we are headed higher so far this afternoon. And what we're going to be looking at in the daily IQ this afternoon is the price action that we've seen here, where we gap down below the prior session low, and we have retraced half of the gap. And the gap is the difference between the prior session closing price, which is up here, and the opening price from today's session. So today that difference was 57 points. We have made up a little bit more than half of that, but we have not made it back up to the gap yet. So we're going to be looking at that pattern specifically here. Let me go ahead and hop into Discover, load it up. I'm going to use a time-based entry, and I'm going to use a time-based entry of 2:30 today. I'm trying to shift these times around just a little bit, so I'm not always doing a 3 p.m. But today I'm going to be using a 2:30 p.m. Eastern Time entry here. It'll be set up as a long that will exit at 4:15 p.m. Eastern Time. Now, the opening filter I'm going to be using here is open up below the prior session low. So that's available here in the opening area section, open below prior day low. Next, I'm going to go into the post-open filters, and I'm going to say that we have not filled the gap as of yet. So I'm going to hit equals here to gap next filled. But I am going to say we have filled the half gap. And as I said earlier, the half gap is 50% of the distance between the open and the prior session closing price. So we have hit that level. And then lastly, I'm going to say we're trading in the top half of the intraday range. So that will mean that the price action didn't, make a run higher to start the day and then take off to the downside type of price action. We're still holding in the top 50% of the daily range. And then lastly, I'm going to say we are in a bull market environment. We're above a 10. We're above a 200-day simple moving average. Now I can click view results. And here we go. These are the results based upon entering the market long at 2:30 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you open below the prior session low of day, and then at 2:30, you have made it halfway back, at least halfway back to the prior session close, but you did not make it all the way back to the prior session closing price, and you're trading in the top half of the intraday range at that time. This is taking place above a 10 and 200-day simple moving average. Historically, we've got 51 samples of the S&P here dating back to 2003. The NASDAQ has 37, the Dow 42, and the Russell only 23. So has definitely happened more often in the S&P than some of these other instruments. If we look at the win rates on them, they're kind of all over the place. We've got weak numbers there in the Russell. We've got very strong numbers in the S&P. That S&P number is very similar to the study we looked at this morning that had a 67% win rate for closing above the open based upon that study. We're seeing that same win rate show up here with this pattern as well. So 67% of these have closed above that 2:30 p.m. Eastern Time price for the S&P. The NASDAQ 57%, the Dow 48%, and the Russell 43%. So kind of all over the place here. Two of them at least slightly favored, two of them at least slightly weak. Average win and average loss is kind of all over the place as well. So the average loss on the S&P is larger than the average win. And that is the case also for the Dow and the Russell. The NASDAQ's the only one that has a larger average win compared to its average loss. So this pattern has been favored historically in the S&P, but that's not been the case in all of the instruments. It's just kind of been strong for the S&P only. The others are a bit mixed or even weak. So hopefully you found that helpful. Good luck today, and we will see you next time.